Buckle up, crypto cowboys. The regulatory roundup begins. Remember the Wild West? Yeah, that's basically been the crypto world for a while. Lots of freedom, minimal rules, and the occasional snake oil salesman. But just like the Wild West, the era of unregulated crypto is coming to an end. Governments around the world are finally starting to wrangle in this digital stallion. Why the sudden interest, you ask? Well, imagine a financial system where anyone can create their own money. Transactions happen in the shadows, and scams are as common as tumbleweeds. It's a recipe for chaos, and governments hate chaos, almost as much as they hate admitting they don't understand something. So buckle up, crypto cowboys and cowgirls. The regulatory roundup has begun. This means new rules, more oversight, and probably a whole lot of grumbling from the crypto diehards. But hey, it's all in the name of creating a safer, more stable crypto landscape, right? The big question is, will these regulations be a fence around the crypto frontier, bringing order and stability, or will they be a noose, choking the life out of innovation and freedom? Only time will tell, but one thing's for sure, the crypto world is in for a wild ride. Uncle Sam wants to know recent US regulatory shifts. Let's talk about America, the land of the free, home of the, well, you know the rest. Anyway, the US government has been pretty vocal about wanting to get a grip on crypto. They've been holding hearings, proposing bills, and generally making a lot of noise about it. One of the biggest moves came from the White House itself. In 2022, President Biden signed an executive order calling for a comprehensive approach to regulating digital assets. This was basically a signal flare to all the government agencies. Hey, this crypto thing is kind of a big deal. Let's figure out what to do about it. And figure it out they are, slowly but surely. The Securities and Exchange Commission, the main watchdog of Wall Street, has been particularly active. They've been cracking down on crypto projects they deem to be unregistered securities. This has ruffled some feathers in the crypto community, with some arguing that the SEC is applying old rules to a new technology. Meanwhile, other agencies like the Commodity Futures Trading Commission and the Financial Crimes Enforcement Network are also getting in on the action. It's a bit of a regulatory free-for-all right now, with different agencies vying for control. Across the pond, Europe's take on taming crypto. While the US is still trying to figure out its crypto strategy, Europe is already a few steps ahead. They've got the Markets in Crypto Assets Regulation, or MiCA for short. Catchy, right? MiCA is a comprehensive set of rules for crypto companies operating in the European Union. It covers everything from issuing crypto assets to running trading platforms to preventing money laundering. Think of it as GDPR for crypto, but hopefully, it won't be as much of a headache for businesses. One of the key goals of MiCA is to create a single, unified market for crypto in the EU. This means that a crypto company that's licensed in one EU country can operate in all of them. No more jumping through different hoops in each country. MiCA also aims to protect investors by requiring crypto companies to provide clear and accurate information about their products and services. They also have to meet strict capital requirements to ensure they can handle a rainy day, or a crypto winter as it were. Crystal ball gazing, predicting the future of crypto rules. Predicting the future is a fool's game, especially with crypto. But hey, that's never stopped us before. So what does the future hold for crypto regulations? One thing's for sure, we can expect more of them. Governments are just getting started, and they're not likely to back down anytime soon. As more people invest in crypto and more businesses adopt it, the calls for regulation will only grow louder. But what will these future regulations look like? Well, here are a few educated guesses. Focus on stable coins, stricter rules around how they're issued and backed, environmental impact regulations to limit the environmental impact of crypto, decentralized finance or DeFi mitigating risks related to money laundering, investor protection, and market manipulation. Section 5. Shielding the little guy, how regulations aim to protect investors. One of the main drivers behind crypto regulations is the desire to protect investors. The crypto market can be a bit of a wild west. Scams are rampant, prices are volatile, and it's easy for inexperienced investors to get burned. Regulations push for clearer information and safer platforms. Crypto companies must provide transparent info and robust security. No more jargon-filled white papers or misleading marketing. Understand what you're investing in and the risks involved. Exchanges need strong security to protect your funds. Compliance with AML KYC regulations helps prevent illicit activities. Addressing market manipulation makes the market fairer. A little protection builds trust and stability in the market. And that's good for everyone, even the cowboys. Section 6. Money launderers, beware AML and KYC take center stage. Ah, money laundering. The favorite pastime of dictators, drug lords, and crypto enthusiasts? Okay, maybe not the last one, but you get the point. Cryptocurrencies, with their pseudonymous transactions and lack of central authority, have unfortunately become an attractive tool for money launderers. But fear not, regulators are on to them. Anti-money laundering, or AML, and Know Your Customer, or KYC regulations are becoming increasingly common in the crypto world. What does this mean for you? Well, if you're a law-abiding citizen just trying to diversify your portfolio with some Bitcoin, don't worry too much. You'll just need to provide some basic information to verify your identity when you sign up for a crypto exchange or wallet. However, if you're planning to use crypto for illicit activities, you're in for a rude awakening. Crypto companies are now required to report suspicious transactions to the authorities. So that dream of buying a yacht with your ill-gotten Bitcoin? Yeah, that's probably not going to happen. Section 7. The price of playing fair impacts on businesses and innovation. Okay, so we've established that regulations are coming for crypto, but what does that actually mean for the businesses building the future of finance? Well, it's complicated. On the one hand, regulations can be seen as a good thing. They can provide much-needed clarity and legitimacy to the industry, attracting more investors and customers. They can also help level the playing field, preventing bad actors from taking advantage of the lack of rules. On the other hand, regulations can be costly and time-consuming to comply with. This can be particularly burdensome for startups and small businesses with limited resources. Some argue that excessive regulation could stifle innovation, driving companies to more crypto-friendly jurisdictions. The key is finding the right balance. Regulations should protect investors and prevent illicit activities without stifling innovation or placing an undue burden on legitimate businesses. Easier said than done, right? Section 8. A double-edged sword. Balancing transparency with stifling growth. One of the biggest challenges in regulating crypto is finding the sweet spot between transparency and privacy. On the one hand, increased transparency is crucial for preventing fraud, money laundering, and other shady business. Investors need to know what they're getting into, and regulators need to be able to track the flow of funds. On the other hand, excessive transparency could stifle innovation and discourage participation in the crypto ecosystem. Remember, one of the original appeals of crypto was its promise of privacy and anonymity. If every transaction is tracked and traced, it could deter individuals and businesses from embracing this technology. It's a delicate balancing act. How do you create a regulatory framework that provides enough transparency to deter bad actors without turning the crypto world into a surveillance state? That's the million-dollar question, or should we say the million Bitcoin question. Section 9. Adapt or perish. Navigating the evolving crypto landscape. The one constant in the crypto world is change. It's a fast-paced, ever-evolving industry, and the regulatory landscape is no different. Businesses that want to survive and thrive in this environment need to be adaptable and willing to adjust their strategies as needed. This means staying informed about the latest regulatory developments, engaging with policymakers, and being prepared to pivot their business models if necessary. It also means building compliance into their DNA from the ground up. Those who are slow to adapt or who bury their heads in the sand and hope the regulations will just go away are in for a rude awakening. The crypto landscape is changing whether they like it or not. The only way to survive is to ride the wave of change, not get crushed by it. Section 10. Don't be a sitting duck. The importance of staying informed. So, you're a crypto enthusiast, or maybe you're just crypto curious. Either way, you're probably wondering what all this regulatory talk means for you. Well, the most important thing is to stay informed. Don't be a sitting duck, waiting for the regulatory hammer to fall. Keep up with the latest news and developments in the crypto space. Follow reputable crypto news sources, read industry blogs, and join online communities to stay in the loop. Knowledge is power, especially in the ever-changing world of crypto. By staying informed, you'll be better equipped to make informed decisions about your investments, protect yourself from scams, and navigate the evolving regulatory landscape. Section 11. The future is now shaping a responsible crypto tomorrow. The future of crypto regulations is being written right now. It's a collaborative effort involving policymakers, regulators, industry leaders, and, yes, even everyday crypto users like you. By engaging in thoughtful dialogue, advocating for sensible regulations, and demanding transparency and accountability from crypto companies, we can help shape a responsible and sustainable future for this revolutionary technology. The crypto world is at a crossroads. The decisions we make today will determine whether it becomes a force for good, empowering individuals and fostering innovation, or a haven for illicit activities and financial instability. The choice is ours. Let's choose wisely.